The NSC is largely steady and turnover is picking up. Is that what you see from where you sit?
Yeah, I mean, the index has been steady around the 3,800 mark, and turnover has been gradually improving from what you saw in the first half of the year. And but we expect the index to be largely range bound because there are no drivers for a significant improvement in market prices. We've seen some of the results that have been trickling in over the last week or so. We've seen some the industrial companies that may not have done so well.
Right.
Some insurance companies still a little bit shaky. So we don't expect a significant increase in the price levels.
Are we seeing more foreigners at this point, or are we seeing domestic investors?
Yeah, we've seen foreigners coming in, largely due to an improvement on the macroeconomic front, but also due to the fact that some companies such as Kenyan, BAT have offering good dividend yields of around 6 to 8%, and I think that's what's driving a lot of foreign investors in at the moment.
All right. You talked about some insurance companies not doing too well. We've just seen CFC Insurance reporting today a 23% dip in profitability. And the after-tax profit, 252 million shillings is where it is sitting. Yeah. And is this unusual?
I wouldn't say it's unusual. What is happening is that on the insurance front, underwriting performance is not so good. We saw Pan-Africa Insurance were largely boosted by an improvement in the investment income.
Right.
So from an underwriting perspective, the insurers are not doing so well because, as Pan-Africa reported, there's a 22% drop in the average premiums paid, in the cost of an average premium. So the premium competition is really affecting their underwriting performance. And to add to that, we've seen a steady increase in medical inflation and inflation in general. So their claims are rising as their premiums drop. And
one of the other reasons is that they say is an underperforming stock market. That also contributed to that drop in profitability.
I wouldn't say so, because what happened is that we've already seen some insurers posting an improvement in investment income, particularly fair value gains. And we saw British American and Pan-Africa both posting improvement in investment income. So I think for CFC, it's more one-off. Probably the investment strategy did not pay off.
Right.
But across the board, we've seen an improvement in the investment incomes.
Is there likelihood that these are the half-year earnings? By the time the year closes out, the stock market will have still continued to pick up. Inflation is coming down consistently. It's a likelihood the central bank might be cutting rates.
Yeah. So that could drive the investment incomes further. But the key thing to watch with insurance is that from an underwriting performance perspective, the performance is not so good.
All right. Let's move on to some other earnings numbers out of Crown Badger yesterday. The paint maker stock had a jump in profits, especially because of increased sales, so that drove revenues quite significantly. What do you think about Crown Badger?
I think Crown Badger is a significant stock. It's something you should look at. Right now, it's selling at a P of just below 4 times earnings. And one thing that investors must realize is that the earnings are driven by gross fixed capital formation, that's gross investment levels, as well as cement consumption. And we look at those metrics, they've actually been rising and they've been stable this year. So for the long term, given the fact they bring in new products, there's a lot of now second homes market and renovations market. So I think Crown Badger is something that investors should look into adding to their portfolio.
That is an interesting one, because if somebody is planning out your portfolio, you don't think, okay, let me put in this random paint maker in my list of companies.
Yeah, I mean, I think maybe it's a historical thing. It's a historical thing for many investors. But if you look at the fundamentals, the fact that they've been growing turnover, the fact that the paint market is growing significantly, I think Crown Badger is something to add. However, one must realize that the free float is just around 200 million shillings. So this would be more for small investors rather than big investors.
All right. Also today, Olympia Capital, which had its results out a few weeks ago, saying it will be delisting its Botswana subsidiary, it is buying out the minority shareholders there. Olympia Capital is one of those investment firms that has its footprint across a fair amount of East and the Southern African region.
Yeah, I mean, they expanded very fast, and I think investors at the time were thinking that they would rather consolidate their gains at home prior to expanding. And we've seen a lot of companies at home, such as NIC Bank, KCB, Equity, also the likes of TransCentury and Centum, focusing first of all on building their core competencies at home prior to moving out. And I think that's what's really affected really affected Olympia Capital because some of their subsidiaries, such as Natwood in South Africa, have really misperformed for the last 5 years, rarely bringing any profits. And I think maybe that's what the management of Olympia Capital should be looking at in terms of the market for PVC tiles and all their home building products is very strong in Kenya. And you'd rather a company focuses on the East African region and focuses competencies here prior to moving out.
So you feel there's still potential for Olympia Capital in Kenya and by extension in East Africa before
I think there's potential. I mean, the management, they know how to organize transactions, and they've got a strong strategy in terms of looking for the home building products. And I think if they'd focus that on Kenya, they'll do well.
All right, that's a good one. Let's finish off with the Kenyan shilling. Typically, as we come to the end of the month, it doesn't perform too well, but this time we're expecting some activity from the Monetary Policy Committee. Yeah, we're expecting something on the September 5th. That's, I think, that's on Thursday next week. And the likelihood is a rate cut, probably 200 to 300 basis points. From my perspective, I think it should even be bigger since they've been conducting monetary policy at 9% through repos and term auction deposits. So the likelihood is for a significant rate cut. However, for the shilling's perspective, we've noticed that international forex reserves have been rising. Right now, they're the highest level they've ever been in a long time. So that could be a stabilizer for the shilling. You're talking about a rate cut. Almost everybody agrees at this point we need a rate cut. Maybe the disagreement among different analysts is by how much. You're talking about 200 to 300 basis points. Some people feel the optimal rate at this point is about 10%, which means we'll have about 650 basis points to go. Precisely. However, at the moment, predicting monetary policy in this environment is not easy. Right. Because the Professor Njuguna has been known to come up with different things and just change things on the go. So given the fact that if they're to be consistent in terms of the policy rate is equivalent to the market rate, then the rate should go down to 9%. However, I think they won't cut it so significantly just so as to not destabilize markets. So that's why I think from the point of view of signaling the market, they'd rather keep it at 200 to 300 basis points. But so far, the last rate cut has had an impact. Would you agree? Not so much. I think even if they had maintained it at 18%, the fact that they're already conducting monetary policy at rates way below 18%. So it really doesn't matter what the rate is, the CBR is. What matters is how at what rate they're conducting repos. Right. And I think they've been reducing that since around May this year.